Morning students. Today in our class we are going to learn what is the meaning of journal entries and what is the format, what are all the different types of journal entries and how we will apply the golden rules in transactions. Transactions are recorded daily in the journal when the transaction take place. So this is the first book of entering the transaction. So it is also called original entry, prime entry, primary entry or preliminary entry or first entry. Journalizing is a beginning stage of accounting process for the financial transactions. In journal, we are posting the transactions in the chronological order, that is, the order of occurrence. Here, we are taking source document as a proof to record the transactions. The process of recording transactions in journal is called journalizing. According to Professor Carter, the journal as originally used is a book of prime entry in which transactions are copied in order of date from a memorandum or waste book. The entries as they are copied are classified into debits and credits so as to facilitate their being correctly posted afterwards in the ledger. Look at the format of journal. You have totally 5 columns in this journal format. First one, date column, then particulars column, then LF column. LF means ledger folio column, then one debit and one credit column. Under date column, the date of the transaction will be recorded. Particulars column, the accounts involved in the transactions are recorded here. The account debited is recorded first and then credited account will be followed. When we write the debited account, we have to use the word DR at the end of the name of the account. DR, capital D and small r. It should be written at the end of the row. This is the format of journal. When you enter the date, the year must be written at the top, then month and then that particular year. When was the transaction happened? Next, your debited account name must be entered with the word DR at the end of the row, and your credited account name must be started with the word TO, capital TO. Before writing the word, you should leave some space from the line. The narration must be simple and completed. The word being or the word for may also be prefixed before the narration. The amount columns of a journal may be totaled at the end of each page and the grand total may given at the end of every month. To show each journal entry separately, you may leave one line or you may draw one line after the narration of a particular column. When the transactions of similar nature take place on the same date. For example, if we sell goods to cash for two different customers, the two separate transactions will combinedly journalized. Steps in journalizing. The process of analyzing the business transaction under the heads of debit and credit and recording them in a journal is called journalizing. The entry made in the journal is called a journal entry. The following steps are to be followed in journalizing. First, read the transaction and analyze the transaction, and then identify the name of accounts which are involved in that transaction. Then classify the accounts under personal account, real account or nominal account. Next, apply the rules of debit and credit for the above two accounts. Then find out which account is to be debited and which account is to be credited. Enter the date of the transaction in date column. Next, enter the name of the account to be debited in the particulars column, very close to the left hand side line, followed by the abbreviation DR, capital DR, at the end of the same row. Then amount to be debited is entered in the debit amount column in the same line. Under debit column, debit amount column, you should write the amount of the particular transaction. Then write the name of the account to be credited in the second line with the starting word to, capital T O. That word should be prefixed after leaving a small space from the line. Against this, the amount, the amount for this account should be written under credit amount column. Finally, write the narration within the bracket in the next line in the particulars column. The narration must be simple and complete. Being or the word for may also prefixed with the narration. Before the narration, you must prefix the word being or for. Different types of journal entries. The journal entries may be the following types: single entry, compound entry, opening entry, closing entry, rectifying entry, adjusting entry, and transferring entry. Shall we learn in detail different types of journal entry? First one, single entry. Single entry is an entry in which only two accounts are involved. One account is debited and another is credited. Compound entry. Compound entry is an entry in which more than two accounts are involved. Either more than one account is debited or more than one account is credited, or both. Opening entry. Through opening entry, the balances of assets and liabilities at the end of the previous accounting year brought forward to the next accounting year. Closing entry. At the end of the accounting period, the nominal accounts are closed by transferring to trading or P&L account. P&L account means profit and loss account. All direct expenses and direct revenues are transferred to trading account. All indirect expenses and indirect revenues are transferred to profit and loss account. Next, rectifying entry. Rectifying entries are passed to make corrections of the errors in accounting. We have one separate chapter of rectifying errors. We will learn later. Adjusting entry. Adjusting entry is an entry made for the transactions which remain unrecorded or require adjustment after closing the accounts for the accounting year. We have one separate chapter for this also. Transfer entry. Transfer entry is an entry through which amount is transferred from one account to another. Shall we see how can we apply the rules of double entry system in the transaction? First one, personal account. Personal account rule is debit the receiver and credit the giver. In case of personal accounts, the rule is debit the account of the person who receives the benefit of the transaction and credit the account the person who gives the benefit. For example, we can say paid Anbu. Anbu is our customer. Paid Anbu rupees 10,000 by check. Accounts affected here is Anbu account and bank account. Nature of accounts involved here is both are personal accounts. Personal account rule is debit the receiver and credit the giver. Applying the rule, when you pay check to Anbu, when you means the business pays check to Anbu, Anbu is the receiver of the check. So Anbu account must be debited. Then who will be the giver for the check? I mean, who will give money for the check? Your banker will give money to Anbu for the check. So you have to use the personal account rule here also. Bank account should be credited according to personal account. Credit the giver. Banker is the giver. Finally, your journal entry will be Anbu account debtor to bank account. Next, we will see how to apply real account rules in a transaction. Real account rule is debit what comes in and credit what goes out. In case of real account, the rule is debited what comes in and credit what goes out. For example, furniture purchased for cash rupees 5,000. Here affected accounts are furniture account and cash account. Nature of accounts, both are real accounts in nature. Here we are applying real account rule. When we apply the rule, furniture comes into the business and cash goes out. When we after we pay cash only, we will receive furniture. So furniture comes into the business, cash goes out from the business. So we have to debit what comes in. Furniture comes in, so furniture account must be debited. Credit what goes out. Cash goes out, so cash account must be credited. Furniture account debtor to cash account. Do you understand? Shall we see how nominal account rule is applied in the transaction? Nominal account rule is debit all expenses and losses, credit all incomes and gains. For example, paid rent of rupees 5,000 in cash. Here the affected accounts are rent account and cash account. Nature of the accounts, Rent is a nominal account and cash is a real account. When we apply the rule, rent is the name of the expense. Debit all, according to our nominal rule, debit all expenses and losses. Here the name of the expense is rent. And cash goes out when we pay rent. Cash goes out. So there we are applying real account rule. Finally, journal entry will be rent account debtor to cash account. Do you understand, children, how we should apply golden rules of double entry system in the transaction? I'll meet you in the next class, children. Bye. Thank you.